Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ZURN ELKAY Water Solutions CORP quarterly report. ZURN ELKAY Water Solutions Corporation offers a diverse range of businesses and services across various industries. The company's product portfolio includes water management solutions, water dispensing and filtration products, filtered bottle filling stations, water fountains, filtered faucets, filtered units and water safety and control products, backflow preventers, fire system valves, pressure-reducing valves, flow systems products, point drains, hydrants, fixture carrier systems, oil and grease interceptors and separators, acid neutralization systems, remote monitoring systems, sensor-operated flush valves, heavy-duty commercial faucets, water-conserving fixtures, stainless steel, quartz, fireclay ceramic and cast iron sinks, hand dryers, restroom partition systems, and lockers. The company serves various end markets through a network of independent sales representatives, plumbing wholesalers, and industry-specific distributors. The significant increase in ZURN ELKAY Water Solutions Corp. (ZWS) stock price over the past year can be attributed to several key factors. The company's strong Q3 2025 financial results, which exceeded Wall Street expectations, were a major contributor. Additionally, robust earnings growth and margin improvement have demonstrated stronger profitability and operational leverage. The introduction of new products, such as the ELKAY Live Easy filtered water dispenser, has also driven long-term revenue growth potential. Furthermore, analyst upgrades, including Stifel's increase in price target to $43 from $39, maintain a buy rating due to stable demand and promising guidance. Overall, ZURN ELKAY Water Solutions Corp. Sustained strong performance, reflected in its consistent outperformance of the S&P 500 over the past year and 5 years, has likely contributed to continued investor confidence. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, institutional customers have been a significant contributor, with a 15% quarter-over-quarter (QoQ) and 25% year-over-year (YoY) increase in sales. Additionally, the company has seen an increase in sales rebates, rising from $73.2 million in 2024 to $89.2 million in 2025, as well as commissions, which have grown from $9.2 million in 2024 to $11.2 million in 2025. Furthermore, net sales have increased by 8% year-over-year. On the other hand, revenue decline can be attributed to specific geographic regions and product categories. The rest of world geography has seen a decline of 5% QoQ and 1% YoY, while Canada has experienced a 3% YoY decrease in revenue. Moreover, product warranty and risk management have shown a decrease, with figures dropping from $4.9 million to $6.3 million and $5.5 million to $6.1 million, respectively, between 2024 and 2025. Net income and profit margins on the rise. The financial performance of a company has shown significant improvement over the past year. Net income has experienced a substantial increase, rising by 26.1% from $123.8 million to $155.9 million in the 9 months ended September 2025, compared to the same period in 2024. This growth is also evident on a quarterly basis, with a 37% surge from $43.5 million to $59.6 million. Profit margins have also seen an upward trend, with income from operations as a percentage of net sales increasing by 60 basis points from 16.3% to 17%. Adjusted EBITDA, a proxy for profit margins, has risen from $299.3 million to $338.1 million in the 9 months ended September 2025. The increase in both net income and profit margins can be attributed to higher operating activities and improved profitability. This positive trend suggests that the company is on a path of sustained growth and financial stability. The company is generating positive operating cash flow, as evident from the financial summary and various pages in the report. The net cash provided by operating activities for both September 30, 2025, $123.1 million, and December 31, 2024, $101.9 million, are significant indicators of this trend. Additionally, the operating activities for 2025, $254.8 million, and 2024, $229.9 million, are also greater than zero. further confirming that the company is producing positive cash flow from its operations. The company's debt level and interest expenses have shown mixed results over the past year. While there are some fluctuations in long-term debt levels, with a slight increase of $700,000 on page 20 and a decrease from December 31, 2024 to September 30, 2025, the overall trend is relatively stable. The total indebtedness in 2025 is reported as $496.4 million, but no comparison is made with 2024. Similarly, interest expenses have decreased by varying amounts over different periods. For example, net interest expense decreased by $1.2 million, 14.5%, from 2024 to 2025, while it also decreased by $3.5 million during the 9 months ended September 30, 2025 compared to the same period in 2024. However, these decreases are not significant enough to indicate a substantial change overall. The company's financial performance has shown a positive trend in the third quarter of 2025 compared to the same period in 2024. Revenue from institutional customers increased by 15.6% to $223.5 million, while commercial revenue rose by 8.2% to $128.3 million. The United States market performed well, with revenue increasing by 10.7% to $414.9 million. Canada also saw a growth of 19.4% in revenue to $27.6 million. On the other hand, the Rest of World segment experienced a decline in revenue by 10.1%. Segment profit increased by 37.2% to $59.6 million, and net sales rose by 11.3% to $455.4 million. Overall, these results indicate that the company's performance has been strong across various segments, with notable growth in institutional and U.S. markets. Management's outlook on company strategy. According to management, the company plans to continue optimizing operating margin and manufacturing footprint through restructuring actions. Despite being well-positioned to adapt to trade policies, costs are still impacted by tariffs. The company has sufficient liquidity with $260.1 million in cash reserves as of September 30, 2025, ensuring it can meet its needs. Overall, management is focused on executing restructuring efforts and navigating the current market environment. The company has a history of distributing value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has paid out significant amounts, with $41.3 million and $45.4 million recorded on page 6 and $45.4 million on page 33. Additionally, the company has also engaged in share buybacks, purchasing a total of 575,600 shares in Q3 2025, as noted on pages 18 and 36. Concerns about inventory buildup and supply chain disruption. Our financial summary reveals a growing concern regarding inventory buildup in our company. The data shows that finished goods inventory has increased by $9.8 million, 4.3%, from December 31, 2024 to September 30, 2025. Additionally, raw materials inventory has seen an increase of $7.2 million, 16.1%, over the same period. These significant increases in inventory levels raise concerns about potential supply chain disruptions and inefficient use of resources. The buildup of inventory can lead to increased storage costs, reduced cash flow, and decreased productivity. It is essential that we address these issues promptly to prevent further complications and ensure a smooth operation of our business. That concludes the financial summary for ZURN ELKAY Water Solutions CORP. Feel free to comment below, and I will be happy to answer them when possible.